Better System Trader, episode 41.
Welcome to Better System Trader, the podcast to help systematic traders of all levels improve their trading. We'll give you loads of expert tips and practical advice on system design and validation, money management, trading psychology, and many other topics. Whether you're just starting out or a savvy systematic trader, we're here to help you improve your trading and find more success. This is Better System Trader with your host, Andrew Swanscott.
Welcome to the Better System Trader podcast. This is episode 41, and I'm your host, Andrew Swanscott. For those traders looking for an edge in every aspect of trading, today's topic is something that it isn't discussed too much, but has had a great impact on the two guests of this episode. The topic is collaboration in trading, and the guests, they're Michael Cook and Kevin Davey. So both of these guests have appeared on the podcast before. Michael was a guest on episode 39, and Kevin, he's been a guest on episodes 5 and episode 38. Both have had extensive trading experience, successfully trading their own money and others. Now in this episode, they share the impact collaboration has had on their own trading, as well as why collaboration is so important, the actual benefits to traders, how to find the right people to collaborate with, and tips to maximising its effectiveness. So let's get right to it. I hope you enjoy this chat with Michael and Kevin. Hi, Kevin and Mike. Thanks for joining us today. Now, you've both been guests of the podcast before. Kevin, you were on episode 5, I think, where we had a detailed discussion on the strategy creation process. And then also again in episode 38 when we had a quick chat about goals in trading. Now, Mike, you've been the most recent guest. You're actually a guest in the previous episode 39. There was something interesting you said in that interview that I think needs to be explored a little more, which is why you and Kevin are both here today. But before we get to that, I think it's important to understand both of your styles of trading and how they differ. So how about, Kevin, you go first? Do you want to explain the style of trading that you do, the markets, time frame, trade duration, etc.?
Sure. Most of the trading I do is pretty much exclusively 100% rule-based, mechanical, algorithmic. There's a lot of different terms for it, but I just follow the rules. A lot of it I automate, and I just trade strategies pretty much any market and all different kinds of time frames. Most of my trades, though, end up being days to, I would say, weeks in duration. I don't do much intraday type trading, but I tend to do more of this swing type trading where I'm going for bigger profits, letting trades run a little bit longer. And that's really the focus of how I trade.
Okay, thanks. And what about you, Mike?
Yeah, I do that quite similar, although my time frame does tend to be sort of 2 to 5 days automated stuff. But I tend to regard that once I've got an automated strategy I'm happy with, then it's just running automated. That's the whole point. So that allows me, sort of frees me up time to, also I do discretionary trading and trading where there's sort of a necessity of manual input, so spreads and things like options as well. So I'll try and trade anything I can within the constraints of, as we discussed, living in Australia and time zones and things like that. But even the discretionary stuff is what I'd call heavily model-based. So it might not be fully automated algorithmic, but I'm getting all the signals from trading models.
Okay, so there is some similarities there, I guess, between the way you both trade, but it sounds like the key difference there is that Mike adds an element of discretion. Is that safe to say?
Yeah, for a lot of stuff, yeah.
Okay, so how did you two actually meet?
Well, we actually first met at the award ceremony for trading contest. I believe that particular year, neither of us won, but I knew the person who won, who was Andrea Unger, won it that year, and so did Michael, and we basically both ended up in Chicago and met at that time.
Okay. Now, as you mentioned, you both participated in that competition at the same time in at least 1 or 2 years. if I can just ask you a question about 2007. Now, Mike, that year you came first with, I think, about a 250% return.
Yep.
And Kevin came second with a 112% return. Now, obviously, there can be a lot of differences in the way people trade and the results they get because of that. But do you know of any key differences in your trading approaches that year that caused the variation in performance results?
I don't think I've actually ever spoken to Kevin on this one. I mean, I certainly was paying attention to him. My gut feel at the time, I remember, was looking at the results day by day and thinking, that guy's a long-term trendy. But I have no idea if that's actually what... is that what you were doing, Kevin? I don't never...
Yeah, it actually was. I had... it was a long-term trend following in a few different markets. And, that's just the way I traded. And one of the things, I don't really recall now how quickly you got up to the 250%, if you jumped or if it was steady. But I do know I didn't really pay much attention to you. And it wasn't because I'd say, oh, this guy's nothing. I was thinking more, hey, this guy's going to win. I can't really do much about it, so I'll just keep doing what I normally do. And that was kind of the approach I took back in 2007.
Right, yeah. So I was going to say that mine was completely different. I'd found a sort of specific niche in the market where someone had written a report and I'd had a look at it. And with my history that we discussed of banking, I remember thinking, well, that's interesting, but I reckon that actually the exit phenomena of what he's talking about is much more interesting than the entry, and that's what I traded. So I was doing future spreads. It was all calendar spreading. And the reason I really liked it and fell in love with it was I couldn't work out a way to automate it in any way, shape, or form. So like a madman, I printed out a graph of rolls. I mean, every single roll of every single product for a decade. So you can imagine how many pieces. That was an entire bookcase row of paper. So I killed a few trees, I'm afraid. And I analyzed, and I sat down and went through every single graph and thought, yeah, this is definitely there, and there's a phenomena there. And that's the kind of thing I love, because apart from anything else, you know that 99 point whatever %, no one's going to go through that process. It's far too much. Everyone's going to love the pretty indicator. So if you ever find something like that, it's fantastic, because it's so awkward to actually codify that it's great to trade. So no, it was completely different to what Kevin was doing.
Okay. Do you still trade that type of style today?
No, unfortunately, that suffered from the two things that always happen with that, which is one, the phenomena just went away because it was dependent on elements of a raging bull market in commodities, and clearly, at the time of recording, we're not in a raging bull market in commodities, to say the least. I think we were down 35% last year. And also that too many people started to have a look at it. So I read a report that said that 3/4 of CTAs, I think it was about 2009, 2010, were looking at trading this, some aspect of what became known as the Goldman roll, some aspect of the Goldman roll. So those two things are the classic things that always happen when you really find something. It never sits there forever, but you just have to make sure you take full advantage of it at the time. So no, I don't really do it now. It's not really there.
Okay. All right. Thanks for sharing that. So, Mike, in your previous interview, you mentioned that one of the benefits of the World Cup trading competition was meeting and working with other traders, one of those being Kevin. And I found it interesting that you work together, even though your trading styles are a little bit different. So I think collaboration is something that isn't really discussed too much, but I get the feeling it's quite an important aspect for traders. Am I right in saying that?
It's important for me, certainly. When I was living in Alaska, I felt very isolated. It's an amazing place to live and all of that, but from a professional standpoint, you're not bumping into traders in the street. You're more likely to bump into a moose. So the one thing I thought was, if I ever move somewhere else that's a little bit out of the way, I'm going to very actively seek out people who I think are good and useful to collaborate with. Yeah. So, it became intensely important to me. I think it's the one big growth point I've had over the past couple of years.
Okay. And so, Kevin, what do you think some of the, or what are some of the problems or issues that traders face that could be reduced through collaboration?
Well, Michael kind of alluded to it. Just the fact that you're so isolated as a trader. I mean, most people I know who do trading are kind of by themselves in an office, especially the retail traders. If you're working for a firm or something, it's a little different. And I think the biggest thing that I notice with my own trading is you tend to get focused on maybe one aspect or one method or one process, and you just focus on that and more or less shut your brain off to everything else. So, you think, hey, I do things a certain way, or I only look at these markets, or I only look at this style. I won't consider something else. And what doing collaboration and just talking to other traders on a regular basis, I think what that does is it opens up your mind to some possibilities of, wow, I never thought about doing option trading at all, for example. Maybe I should look into doing that. Or here's my process for developing strategies, and this trader, Michael, does something a little bit different. So maybe what he's doing, maybe I should incorporate some of that and try it out. So it really kind of opens your mind back up to all the possibilities of trading. And the great thing about working with people who their pedigree and that they're good is that you tend to believe what they say. With most stuff in trading, you see all sorts of stuff on the internet of people claiming, hey, I've got this day trading method that is a cash register, or you see all this stuff, and usually those aren't people who trade. And so at least once you get a little bit of experience, to discount that. So you turn your brain off to those kind of methods. But, if somebody like Michael said, hey, I'm doing great with this particular method, I would believe it. And I would say, this is worth my time because it's working for him. And I know he's successful because I know his history. So I think that's one of the huge benefits of collaborating, especially with somebody where that they're a good trader.
Michael, do you have anything to add on the benefits of collaboration?
Yeah, I think that's precisely right. If I read something blind on the internet, quite often I think, I'm not even wasting time looking at that. If Kevin said anything, then I'd probably be, as with everything, you always that trust but verify thing. I'd sit down and spend some time playing with it to see if, not just to. I don't think I've ever copied anything verbatim and just used it. I can't think of a single occasion ever where I've done that, but often it gives you an idea of something very similar, or to play with it a bit, or a bit like I said earlier with the spreads thing of, well, what about the actual reverse of that? I think the report was perfectly valid that I'd read, but later on in the trade there's going to be another trade that's very interesting, and that kind of thing. But if Kevin said anything and I thought it was interesting, then I'm quite prepared to sit down for 2 days and work on it, or play around with it and see what I could do, or maybe play with it in different products or different different sort of time parameters or something like that. Whereas I just wouldn't waste the time with a lot of other stuff. So I tend to agree on that. And another thing I find really key about it is often it challenges assumptions. So there are assumptions that are so core you don't even realize you're making them. And it takes someone who you respect to say, well, I don't do that, for you to suddenly realize, oh, I'd never considered that. I was always, somewhere else with what I was questioning. There was one occasion, for instance, I think it was the awards thing with someone I think's been a guest on the podcast, Andrea Unger.
Yep.
And I was out with Andrea, and we had sort of 10 minutes to kill, and we grabbed a coffee in a hotel foyer with a wealthy investor happened to be there, so there were 3 of us. And the this chap ended up later on, and he said that he was quite the sort of student of body language, and he said he'd sat in a million meetings over the years, but never once had he seen someone's body language switch so rapidly as mine did with a comment Andrea made. And Andrea was talking something about not always walk forward testing, and I thought that was so core to trading. I'd never considered not doing it as part of the testing process. So, my body language obviously shifted, and this other guy picked up on it. But that led me to play a lot with process on the, okay, maybe there are better ways of doing this. Maybe there's much quicker ways. And it took Andrea just making a throwaway comment for that to sort of occur to me. So, that's one of the real things I get from collaboration, is often it's the throwaway comment in the middle of a conversation.
That's quite an interesting benefit, I guess, of challenging some of your beliefs or things that you've never questioned before just through a comment like that. So, okay, so how does collaboration actually work in a trading context, though? So I think one of you mentioned that you have regular conversations. What's the process when you're looking to collaborate?
Well, it's I don't know if there really is a process other than what Michael and I do is we just talk regularly. So we try once or twice a week just to talk, and we don't necessarily have an agenda that say, hey, we want to get through these points or we want to talk about system development or anything. We just kind of talk. And obviously, since our friendship is kind of built around trading, I mean, that's what it's based on. That's what we're going to be talking about. And it could be things like, I would tell Michael, I'd say, boy, I got hammered today with the Swiss franc. And he'd say, oh, what are you doing? And I could describe the system possibly. And then it just kind of rolls from there. And maybe he has some comments of things he's doing. So it's kind of like a free form conversation talking about trading. But like Michael said, it's sometimes those little comments that, I don't think much of it when I'd say it, or he wouldn't when he would say it. Mm-hmm. And it becomes something that sticks in my brain that, wow, yeah, I'd like to try that. And just to give you an example, a few months ago, we were talking about, I think we were talking about options, and Michael mentioned something about options near expiration, and that's all he said. He didn't say, hey, here's a strategy you should try. And over the course after the conversation, I kind of started thinking about this and more and more and more. And eventually I came up with this idea that I've started to test. I haven't finished it yet, but it's basically a whole strategy built around option trading on the week before expiration. And probably when I end up finishing it, if I show it to Michael, he'll be like, I don't know what you're doing. I don't remember this, and he won't, because it was his, if you want to think of a seed, it was his seed of an idea. And then I kind of took it and kind of planted it in dirt and threw some water on it and grew it. And that's, to me, how collaboration is kind of interesting, because it could be things that I don't think much of that turn out to be gems to the other person.
That's interesting that you can find inspiration anywhere, I guess. So, Michael, did you want to add anything to that?
Yeah, I'm the same. I mean, it does tend to be free-flowing. And what I do is I just have a weekly printed-out diary I do every weekend, and I'll jot down occasionally things, thinking must mention that to Kevin or Andrea or just to that's an interesting idea or something. So it's not, we're not collaborating to the level of, right, let's sit down and jointly develop strategies. Although, I've discussed that with others as the sort of monster project of, all right, well, why don't we just sit down and develop 100 strategies together? But that obviously is sort of quite a major thing out in the future. But yeah, I mean, any conversation will start in one place and will immediately veer off all over the place. And that's, it's got to be fairly free-flowing. Someone will come up with something normally within seconds. That's very interesting. And the one thing I would say that I find so effective about this process is the number of times I've just been bashing my head against a wall for a week with my system and with people who work with me, and we're trying to develop something and nothing's working, and it's just a frustrating process that we're all familiar with who do this sort of, who are in this game. Mm-hmm. And then I'll have a chat with Kevin, and he'll say something, and I'll think, great, I've just spent a week doing X, Y, and Z. It might not be related to that week, but I'll have got more out of a single comment or a single concept or something of, now I know what I can run with. This is very interesting, than the whole week before. So I mean, the sort of force multiplier effect of this kind of thing is amazing.
Okay. All right. So are there any indications that a specific person may be a good or perhaps a bad fit for collaboration?
And that's interesting. I was actually advised to think about this professionally, and that's why I first reached out to Kevin. So I did sit down and think who would be a very good fit for whatever reason, and I thought, well, I know Kevin, I know his history, I know he's pretty good, and also he's roughly like me in process and testing and fairly scientific in his thinking. So I mean, it might be if someone's a complete discretionary trader, that might not be the best fit. So I think you need to decide that slightly, but to an extent, differences as well are going to be, you're going to get value from it, so long as the people are actually experienced traders. I mean, that's the key. Yep. If they're not experienced traders, then you're just talking to a guy in the pub, which is enjoyable, but it's not going to be professionally useful to you.
Yeah, and to follow on with that comment, I've done that before where it was a method I was trying that was discretionary, and this was a number of years ago. And I've tried working with people, and when you don't know their pedigree, and as it turned out, this person was not a successful trader at all, and trying to work with somebody who's not successful is tough. And so the only time I really do it, there's only a few people who I will listen to their advice, and Michael's one of them. And it's because I know his history, and I know his ability, and I know he's a good trader. And so that, to me, is really one of the keys with anybody you want to collaborate with. I don't want to say it's a mentorship type thing, but it almost is, because, if you're looking for a mentor, you want to find somebody who's above you rather than somebody who's below your level. And so in that respect, the only people I work with are people who I think can lift me up to, their level. And, they might think the same thing, that I'm at a higher level than they are. That doesn't really matter. It's just in my own mind, hey, these are guys I know I can learn from, and that's why I want to work with them.
Yeah. Okay, so Kevin, you've kind of touched on this a little bit already, but do you have any tips for maximizing an effective collaboration?
Yeah, I mean, well, one is obviously to spend a lot of time trying to find the right person, somebody who, one, you can help, but at the same time, who will help you. And two, I think the other key is you have to be willing to push the boundaries on whatever you're doing. So for example, with me, if I was so set in my process that I couldn't listen to criticism of it, or couldn't think of doing something else, then collaboration wouldn't really work, because the only person I'd want to collaborate with is somebody who thought exactly the same way as I do. And that's no good. It could almost be like two guys who are drowning and they're both in a raft. They're not really going to help each other if they're fighting over it. You want somebody with a big boat who's going to pull you up, kind of thing.
Yeah. Yep. And Michael, did you want to add anything to that?
Yeah, again, I think it's right. But then, of course, obviously, one of the reasons Kevin and I have sort of lasted is we are quite a good fit. But and that applies to other people as well that I've worked with. But I think a lot of it is, that point that Kevin was making about being open to challenge and stuff. That's quite key, but that's sort of fundamental to what we do. I mean, I think you need to learn about trading that you're not looking for the silver bullet. There's no universal truth that you're going to find, notwithstanding half of the internet, which will tell you otherwise. It's not true. What you're looking for is phenomena or trading relationships that will repeat in the future, that are robust. Elegance is probably not something you're going to find. You just want something that on balance is going to work and, is predictive, is going to work in the future, or repetitive rather. So that's what you're after. So once you recognize the whole no need for the universal truth thing, that means that you're completely open to other ideas, because you know that whatever you're doing is not particularly perfect and there are 100 different things that are going to work, and it's just a process to find, well, not one of them, but to find more and more and more of them. So the improving process will be constant. It will never end. And the whole collaborative aspect, improves the process by factors and factors.
Yeah, sure. Okay, if I can just jump back to Kevin for a second. You made a statement about finding the right person. Now, not every trader can follow the path you guys did and win the World Cup trading competitions, but what about traders in other situations? How can they find traders to collaborate with? Do you have any tips there?
Yeah, I mean, you just, for somebody who's looking for somebody, there's enough information, let's just say, on the internet where you might be able to identify some traders. So it might be somebody in a trading forum, for example, that you see some of their posts and you think, wow, I like the way this person thinks. And, hopefully you can do some research to actually say this person's successful, because the trouble with anything on the internet is it could be just some guy in his parents' basement, pretending to be some kind of great trader when he doesn't have two dimes to rub together. But that's one place where you can look for it. And you really just have to kind of be patient, and eventually you'll see some people that you think, wow, I might be able to work with them. And the best thing then is probably just to try to reach out and see if that person might even be willing to work with you. And it might be more, especially starting out, as like a mentor type relationship. But if you have something to contribute, that person will probably keep you around and it'll become more of a collaboration over time.
Now, Michael, we've heard a lot about the benefits of collaboration, but are there any disadvantages or things that we need to watch out for when collaborating with others?
On a theoretical level, I can think of some that that you might, for instance, you do need a certain confidence as a trader. And often that comes with experience, but a lot of it, I think, is to do with your inherent makeup or your psychology. And with, individual trades, so you need the conviction and you need the belief to actually constantly put trades on and deal with drawdowns and all of that kind of stuff. So if you're likely to just, negate your own view to someone else's, then I suppose that would be a disadvantage. But I think if you're that personality, you're probably not really suited to trading anyway. So, I mean, that might be a disadvantage. And also, getting the wrong people, that would be a classic one where you're talking to people who are, essentially charlatans. And I sort of have a view that there's two types out there, and they're both pretty prevalent. One are just complete out-and-out idiots / crooks, and the other group is those that are not deceptive to others. They're self-deceptive is the problem. They're incapable of analyzing their own performance with the degree of honesty that's very much required in trading, and thus they think they're very good, but they're delusional, and I think that's pretty common as well. So, maybe avoiding the wrong characters would be one disadvantage, and if you don't have the confidence yourself you want to take all of this on board and then process and analyze it yourself, any new idea, and you should be able to come to the conclusion of what I'm doing, I'm not is right and they're wrong, but I'm more comfortable with this, or this is a better suit to me, but the flexibility to take something on board, or to adjust what you're doing, or to run with a new concept, and so you do need that sort of level of confidence. But I can't really think of any other disadvantages. I mean, none particularly come to mind. It doesn't really cost you anything other than time, and not that much of that. And so, no, I think the benefits massively outweigh the drawbacks.
Okay.
I have one disadvantage that has never occurred to me personally, but it could to some people, is there has to be a certain level of trust for a collaboration to work. And let's say I have all these great trading ideas that I want to discuss, and if I don't trust the other person, I'm not going to do that. And so I'm going to leave a lot hidden, which isn't good. But at the same time, you have to be willing, if you're going to talk about something, to accept the fact that the other person might take your idea and run with it and, become wildly successful with it. And where you could think, well, hey, that was my idea, and yet I didn't get the benefit from it. And that's, you got to be willing to accept that as a possibility. And in my own collaboration, there's things I say that, hey, this, in the back of my head, this might be a great idea, but then again, if it was such a great idea, I should have been doing it in the first place. So, so you definitely have to trust the other person that, one, they're not necessarily going to steal your ideas, but they might take your ideas and do things with them. And if you don't like that, you're probably better off not revealing those things. There's a lot of people out there who are scared to death that their little indicator or whatever that they've invented is somebody's going to steal it, which probably ties in with Michael's thing about delusion, because most of those people might be a little delusional that their indicator's so great in the first place. But if you're going to collaborate, you've got to kind of lay your cards on the table and deal with sometimes things that you're not expecting to happen.
Yeah, sure. Okay, if I can just ask one more question on collaboration before we move on. Is it possible to collaborate with more than one trader? Are you in touch with other traders, and what have you learnt by doing so?
Oh, yes, certainly. In fact, that's really the ideal. I think you can overdo it, but I think a small group makes sense. We all, as you mentioned, we all met at, we've met at award ceremonies. The problem now being that, I don't think we're going to be entering anymore, so that's the opportunity to meet up. But certainly, for instance, another person who's been on your podcast, Tim Rare, who's a nearby neighbour as far as New Zealand is nearby to Western Australia, which is not remotely. For instance, he called up one day and he said, "Are you going to be in town next week?" And I said, "Yes, I'll be around." And he said, "Great, I'm going to drive down and see you." And I said, "Where are you drive down? From where?" And he said, "Darwin." And Andrew, I mean, you're Australian, so you'll be familiar with, what are you, insane? That must be 4,000 kilometres. That's further than if I just drove from London to Cairo. But he likes his driving. And he drove down and we spent a couple of days together. So, yeah, I mean, certainly, and Andrea Unger, I've flown to Italy to spend time with him. He's flown to London when I was based there. So long as you have that, well, Kevin was talking about trust from an empirical point of view, but as long as you have the trust that the person is worth the time, that element of trust, if you like, I try with a small group to have a decent relationship, because everyone has good ideas, and again, getting away from the silver bullet, it's just the continual free flow of to improve your performance. That's what we're all after.
Mm. And when you say a small group, what kind of numbers are you talking there? 2 or 3 more?
Well, yeah, I mean, if you're lucky enough to know 2 or 3 really decent traders, also who are some kind of fit with you and who'll be prepared to spend the time, so it's got to be mutually beneficial, then yeah, that would be my ideal, but I'm sure that some psychologists have done studies on this, but that feels intuitively about right to me.
Mm. Kevin, did you want to add to that?
No.
Okay. Cool. Now, I know that you're organising a trading masterclass with some of those collaborators that you've mentioned. I want to discuss that in a few minutes, but before we get to that, if I can just ask you both a couple of general trading questions, because you both obviously have a huge amount of trading knowledge and experience. I think it'll be interesting to see if your responses are the same or different as well, because everyone has their opinion about certain aspects of trading. So perhaps, Michael, you'd like to go first. What is the most important aspect of trading, and why do you think that's the case?
Oh, I mean, it is a bit of an element of building blocks. So the most important is tricky. I could certainly tell you what I think people think is the most important, which I certainly don't, and that's entries. People I think are obsessed with entries. I joked once about that everyone's obsessed with 3 things: entries, entries, entries. You know, like property investors are location, location, location. And what they should be obsessed with is 3 things, but none of them are entries. They should. Well, the key things I think are probably in order of importance are exits, position sizing, and money management, and psychology. So if you held a gun to my head, probably psychology.
Okay. And what do you think, Kevin?
I would say psychology would be second to having a strategy or strategies that have some kind of edge to them. And the reason I say that is because I know a lot of people, and I'm sure everybody has seen people on internet forums and stuff who think psychology is the end all. And if they journal all their feelings and stuff, somehow staring at a chart, they're going to become profitable. And yet they're trading a method that they don't know if it has any kind of profitable expectancy long term. So they might be the perfect psychology type person, but they have a terrible strategy. So for me, you got to have that strategy with the positive expectancy. And then once you have that, you do have to have the right psychology, because I've seen plenty of people ruin what look like good strategies because their psychology is terrible. So I would say first, you got to have an edge, some kind of strategy that's long-term profitable, and then combine it with excellent psychology.
Okay. Now, Kevin, you do a lot of work with other traders through your strategy factory. So you've kind of touched on this already, but what do you think is the most common issue or mistake that traders make?
What I see most people doing is they just develop strategies incorrectly. And they do things such as continually building a better back test, where they will take an idea and get an equity curve and say, ooh, that's not good enough. I'm going to add a filter. And they go add a filter, run it again. Ooh, it's better. Oh, that's good. Oh, I'm going to go add another filter. Oh, I'm going to look at my worst drawdown. And, oh, that happened on a Tuesday in October. So I'm going to make a rule that I don't trade Tuesdays in October. All of a sudden, your equity curve looks even better. And before they know it, they have 10, 20 different little filters, or even 5 filters, and they've created this great-looking back test, but it has no use going forward. It just will not look that way. And that's... and the people who tend to think like that more, from what I've seen, tend to be the more scientific, engineering, math type, people where there's a right and wrong answer. They tend to do that a lot because they want perfection. You think about a physicist who's developing equations to go to the moon. He's going to do that exact. There's not room for a lot of error, where in developing a trading strategy, there is a lot of error because there's a lot of unknowns, and you've got to feel comfortable with not getting perfection.
Thanks, Kevin. Now, Michael, did you want to add anything to that?
Yeah, it's so true. That particular aspect. I had a girl working for me in Alaska, and really very good, but I knew immediately what the problem was going to be if there was an issue, which is that thing about the engineers and the mathematicians. That can go either way. Incidentally, I found that people with that mindset, they can be highly effective because they also can be very good on process. So swings and roundabouts with all different types. But it's this issue of going for the silver bullet, the elegance, the perfect solution, and just flogging the thing to death to get the perfect history. Where, as I said earlier, you want something that you think is going to repeat in the future. But you look at it, and immediately, the second you look at it, you think it makes sense. I can take a step back, and in my mind, I can think about what's going on in the market that's caused that, I'm designing something to take advantage of. And so long as I can do that, and it looks good enough in the past, and I have no particular reason when I think about it to think the market is changing. For instance, my 2007 thing where I could see that the market was going to change. So I just switched it off before it blew me up. And robust, where you're optimizing it and every single value you feed in is a positive expectancy and all of that kind of stuff, then, that's what you're after.
Okay, great.
So, yeah.
Well, thanks for sharing your insights with those answers. Now, as I mentioned earlier, you're both involved in a really exciting trading event being held in a few months' time. I'm really interested to hear more about that. So can you explain what it is?
Well, what we're doing is Michael and I are getting together with two other great traders, Tim Rea and Andrea Unger, both who've been on your podcast before. And we sort of did this last year in New York because Andrea did a workshop in New York, and Tim and I went to it. And Tim and I were just blown away by how much we learned just listening to Andrea. And after that, I was talking to Michael, and we were kind of thinking, wow, this might be cool for all of us to get together. And originally it started out where, hey, we'll just get together in New York and, just the four of us just sit around and talk trading. And then that's where it started, and then it kind of evolved into, well, maybe we can make this into a workshop where we can actually teach people and at the same time learn. So that's kind of how the idea came together. And what it's going to be is a weekend, 3.5-day workshop where all of us are going to be presenting on different topics of trading, how we do things differently. And the neat thing is that we all get to learn from each other and at the same time teach, a small group of people how we do things, and hopefully they'll be able to, go off and replicate some of the successes we've had.
Yep. So more of that collaboration thing by the sounds of it.
Yeah, absolutely.
So that's pretty incredible, I think, because some of those presenters that you've got don't actually hold events very often, do they? I think maybe Andrea does maybe a once a year thing, and I'm not aware of Tim and Michael doing any type of events. So I think to get access to those traders all in the one place is pretty amazing. Do you have any idea on the ideal type of audience for this type of event?
I'm really excited about this. As I sort of alluded to before, the only time we were all meeting was at award ceremonies, and if we're not entering things anymore, we're not all going to be meeting together, and we live literally the four corners of the globe. It would take something like this to bring us together, and I think that's why everyone sort of engaged with the idea really quickly on this would be phenomenal. So rather than Tim having to drive 4,000 kilometers or, or the fact that, I talk to Kevin, but we can't all talk together because the time zones alone, it's very painful. We do occasionally, but it's a very difficult thing for all four of us. The amount we'd get out of it, and hopefully, other people attending. So on to your thing about who it would suit. I think it won't suit people, I think, of two particular categories. It's not going to suit absolute beginners because, we are all traders. So I like simplicity. So all the code on my stuff is really simple, and it's not going to require anything other than, high school maths, if that. But someone who doesn't really know what a stop is, a stop order or something, you're going to be better off doing something else. And the other group it's probably not going to suit is the people who are after the silver bullet. It's like, well, that's not really what it's about, and you need to progress in your experience to realize that that's not what it's about, and hopefully you do. But other than that, I think who's serious about really wanting to improve their trading, that's who it's for, and I think it'll suit anyone. I think it'll suit discretionary traders as much as systems, but inevitably I think we'll spend more time on systems things. But I would really like to do some sessions on things like special situations trading, which I love to do, and I don't know if the others do or don't, so hopefully they'd get something from that about, well, there's a specific phenomenon you can do here, and you can't test 900 trades, but it'll be extremely effective when it comes up. The whole systems process that we do go through and idea generation and all of that kind of stuff. So I'm really, really excited about it. It'll be the first time I've seen the other three together in years, and we get so much when we're one-on-one. It's going to be fantastic when there's four of us in a room.
Yeah, I think that's an incredible opportunity to have the four of champion traders in the same workshop. So it's definitely not something to be missed. So for anyone that wants more information, I'll add a link on the show notes page so that they can go and check it out further. So thanks so much for your time today, Kevin and Mike. Is there anything else that you'd like to mention before we wrap up today?
The only other thing I'd like to add is just from what Michael was saying about people who should not attend. And, the one group, it's kind of along the lines of the silver bullet group, people who are expecting some kind of flashy, kind of trading is easy type thing, which a lot of people who do trading education, that's what they're doing. They're doing this glitzy kind of, oh yeah, let's trade from the beach kind of thing. And if you think that's what it's going to be like, or if that's what you're hoping trading's like, then this is probably not for you, because this is going to be more of a down and dirty kind of, here's what professional traders, not professional educators. I probably do right now the most educating with the online workshop I run, but I have never done an in-person event where I've been a speaker, a trading event. So, I'm not a person who's been doing this for years and years out on the trading circuit, and Tim very rarely talks to anybody. Michael doesn't do it, and Andrea, I think he does it maybe once a year. Mm-hmm. So what people would be getting out of this isn't professional sales type trading people. They're getting professional traders who, if nobody shows up, let's say we had no attendees, the four of us will still have a great time and still learn a ton from each other. Mm. And that's kind of how we all said we were going to do it, is we said, hey, if nobody shows up, we're not going to consider it bad, because we're still going to be talking to each other. And we all know we're going to walk out of that 3 or 4 days with a lot of good trading ideas and a lot of things to test and to try out.
Mm. Yeah, absolutely. Yeah, I'll be taking extra pads. And exactly what Kevin said. I mean, the first thing that I think came up was, if no one attends, it's fine, because we're going to get so much out of this. This is what it's about. But in a way, it's good for people to attend, or obviously depending on when people are listening to the podcast or did attend, because it forces us. No one can drop out now. We're committed to this.
It's out there now.
Everyone has busy schedules, and this kind of thing absolutely ensures that we're gonna hit it with 100%. Fully prepared, because we're obligated. But equally, it's for professionals, none of whom are going to want to embarrass themselves in front of the others. We're all contemporaries. So we're all going to be sort of throwing out our best stuff because, of course, the last thing you want to do is have people think, well, those three are great, but that guy's an idiot. So I'm really looking forward to it. I think it'll be phenomenal.
Yeah, and it also, it's a challenge to each of us because we know that when we're up there talking, the other three guys are going to be challenging. Why do you do this? Why do you do this? And that alone, I know from me personally, will make me a better trader when somebody like an Andrea or a Michael says, why do you do that? I don't think that's right. And that's kind of the workshop, the way I'm envisioning it. Those kind of things are probably going to happen. And so all of a sudden, I'm on the spot. Why do I do something? That's going to get me thinking, well, maybe there's different ways to do it. And that's what people are going to see and hopefully benefit from.
Yeah, well, that sounds like an incredible opportunity. So for anyone who wants more information, as I said, I've got a link on the show notes page so you can go and check it out a little bit more. Excellent. Well, thanks again for joining us today, Kevin and Michael, and sharing so much valuable insights into collaboration and trading in general. So I wish you both the very best for the year ahead.
Thanks, Andrew.
Thanks.
All right, cheers.
Thanks.
Bye-bye.
Bye.
Thanks goes to both Michael and Kevin for the chat on collaboration today. Now, it's not something I'd considered in trading before, and I haven't really seen it discussed too much, so it was really quite interesting to hear some successful traders share the impact that it has had on them. Now, as I mentioned, collaboration doesn't have to be actually working together directly, but it can be as simple as a regular chat with other traders, and as Michael and Kevin mentioned, there can be a huge amount of value by doing so, including new ideas or concepts, fresh perspectives, support, a whole host of benefits there. And also, I don't recall if it was Michael or Kevin who said this, but a quote I remember was, "I'll get more out of a single comment than the whole week before." Now that's pretty powerful. Now, as we discussed towards the end of the interview, if you'd like to know more about the Trading Masterclass being hosted by Kevin, Michael, along with Andrea Unger and Tim Ray, all successful traders, I've got more details on the show notes page, so head over to bettersystemtrader.com/41 if you'd like to know more. Also, if you've got any questions or comments for Michael, Kevin, or myself, post them on the show notes page there and we'll get back to you. That was bettersystemtrader.com/41. So that's it for this episode. I hope you enjoyed the chat on collaboration with Michael and Kevin. I'll catch you again in a fortnight. Thanks for listening to Better System Trader.
Thanks for listening to the Better System Trader podcast. The next step is to head over to bettersystemtrader.com for more expert tips, practical advice, and exclusive content. Catch us next time for even more great ways to improve your trading here on Better System Trader.